All right. We are live with another Quick Tip Tuesday. This week, change a little scenery. Landlord life, entrepreneur life, always on the road. So I wasn't making it home, so I had to do this one on the road. This week's topic is, what is equity? Equity. I get this question a lot because for some it's kind of hard to grasp what is equity, but typically equity is what your house is worth minus what you owe on the house. So let's say, for instance, you own a house currently. You purchased it, let's say, a week, a month ago, a year ago, whatever the case is. You purchased it at a good price. Your current loan is about $200,000. That's what you owe on the house. And right now, similar homes in the area, that they're selling for about $300,000. So right there, you have about $100,000 of equity. So equity can vary. Equity can change over time. Equity can be shared depending on how many people own that specific property or have interest in that property. So it's good to be able to utilize, but I like to think of equity as kind of unrealized gains. If you're familiar with the stock market, you don't have that as a profit until you actually sell that house. So you can own a house, you have the loan, it's worth more than what you owe, and that's the equity, but you aren't able to pull that money out day by day and just use that money. There's different ways in order to pull equity out. You can do either a second mortgage or a first mortgage, which is a cash out refinance. So you will basically pay off that first mortgage and have some money in your pocket, and then you will pay off that first mortgage and have money in your pocket, and then it's a win-win situation. Not everyone utilize their equity. Sometimes it's good to use it, sometimes it's not. Just be careful on not over leveraging, basically pulling too much equity out of all your homes. Most of the times when you do the cash out refinance, the payments will go up, so keep that in mind. Make sure it cash flows, and make sure you're using that money to keep investing. You're using that money smartly. So definitely, and then the second one, the second mortgage, is basically you having a home equity line of credit. You're basically putting a second mortgage on the home. Make sure combined, either it makes sense for you, you're investing that money and you're bringing money in to pay that second mortgage and possibly more. So keep that in mind. How do I know how much equity I have? That's a very not a straight answer. So you can definitely see, what you owe on the property. That's one. You can definitely do an estimate and see what homes in your area are selling for. You could do an estimate how many 3-bedrooms, what colonials, if it's a multi-family home, the same bedroom count, bathroom count, what sold like in the past 3 to 6 months. Same condition as well. Keep that in mind, because you cannot compare a brand new renovated home to someone's older house that needs work. So definitely keep that in mind. You can do an estimate, but at the end of the day, you can call in an expert to do an appraisal on your house, see what your house is worth. They'll definitely get into the details, see exactly what's going on, and then from there, you can basically see what is worth minus what you owe, and then what the equity you have. But you can do a rough estimate and do some of your own legwork. But if not, if you have enough equity, you can go to a bank and take out a new mortgage or a second mortgage and take advantage of that equity. What can I do with my equity? You can definitely do a lot of things with equity depending on your interest. Well, number one thing I would recommend is investing. Use that. If you're able to pull equity out of your house, I would 100% see if you can invest. don't put money out. Well, unless you have maybe you need some work in the house and you want to fix it up. Maybe it's a bad roof or whatever the case is. Then that makes sense. You're pulling money out of the house to make it better. You have to fix a roof. It's definitely one of the cheapest loans you can have. It's one of the home mortgage. So low interest rate. So definitely, if it's your primary residence, definitely take advantage. Pull that money out and use it to either fix up the house, deferred maintenance you have in the house, roof, new boiler, new furnace. Those big ticket items where most of us may not have that laying around in the bank. It's good to be able to have. If you have that equity, it's good to use it, but don't abuse it. Keep that in mind. Is equity the same for everyone? No. So not everyone would have the same equity. It's just everyone house is worth a different amount. We can have two houses that are worth the same, but one person has a higher loan amount, higher mortgage. The other person owned it for some time, or maybe bought it at a lower price. They would have more equity because their loan amount is smaller. So equity is huge. Make sure you use it. Don't abuse it. Use it the smart way. Pull it out, invest, and rinse and repeat. Just make sure if you're looking at it from an investing side, make sure you're running your numbers. When you typically put equity out of the home, your mortgage may go up, may go down, depending on your situation, your interest rate, the type of loan you had before, the type of loan you're going to. So just keep that in mind. I want to cut this short because I'm still on the run. Landlord life. If you have any questions or any concerns, you want me to discuss any new topics for next week's Quick Tip Tuesday, reach out to me. I hope everyone has a great rest of your Tuesday. Take it easy.